The U.S. Senate Committee on Banking, Housing, and Urban Affairs introduced legislation Tuesday requiring banks to maintain digital dollar wallets to help facilitate coronavirus stimulus payments to consumers. I couldn't think of a better person to join us now to discuss this than Cheddar's own fintech and crypto reporter, Tanea McKeel. Tanea, so good to see you here this
Nice to see you,
afternoon.
Brad.
Absolutely. What exactly do they mean by the terms digital dollar and digital wallet?
I mean, who are we kidding? The payment system is mostly digital at this point. So the dollar pretty much is digital. This is more about accounts and specifically accounts, bank accounts with the Federal Reserve. So this sets this could set, depending on how it's executed, a kind of alarming, creepy precedent. And that's not the point today when we're just trying to get these stimulus checks out to people as much as possible. So I will get to that a little bit later. So these Fed accounts, they're literally called Fed accounts. It would allow direct access between the Federal Reserve and anyone that wanted to take advantage of this. They are obviously aiming this at people who are unbanked or underbanked and are having to rely on shadow banking services like payday lenders and check cashiers and companies like that. So it would sort of remove the commercial bank from the picture. These would be these funds, the point is to get these funds out as quickly and efficiently as possible. So this would be a quick way to do that, and people could go redeem these funds, or just access their bank account however they need to at a Fed member bank. So wherever your local bank is, also post offices.
And so, who exactly is this aimed at?
Um, I mean, we've been talking about this stimulus package all week long. So this is for your average consumer. So it's $1,200 for the average working adult that's going to be making 75K or less, and then it kind of modifies after that. That's sort of the tough part for me. I mean, they are saying that this is going to be targeting people who are working and therefore have, their taxes filed with the IRS, which I think poses a little bit of a challenge because a lot of people have not filed their current 2019 tax returns. So it remains to be seen. I mean, a lot of people's lives could have changed drastically between 2018 and the 2019 tax filing season. A lot of people in general just don't file their taxes at all. So how you determine who exactly gets this check in the mail, which by the way is an option if you are not in the unbanked and you do opt to not have a bank account with the Fed, you may receive a check in the mail as well. But yeah, just determining that list of who exactly is going to be receiving a check, there's a little bit of a problem there.
And so, in reality, is this a workable solution?
That is the thing. Just last time that they had to send checks out like this, it took a couple of months. It could really take a couple of months, and that I think that this proposal is about speed, is about getting money to people as soon as they possibly can. But I think that the hiccup is going to be determining where is the database of people who actually qualify for this, because I think that a lot of people that qualify are probably not part of that list. So just how fast the IRS can get those names together and make sure that everyone is included, I think is the big question mark for me right now versus the actual delivery of the payment.
All right, Cheddar's own fintech and crypto reporter Tanea McKeel. Good to see you this afternoon tonight. Thanks so much.